With 4 stars of liquidity and a weak negative correlation to the SPY, meaning that it sometimes goes against the move on the S&Ps, TLT might be the next candidate for short premium if you don't really care about direction, if you want to just be neutral. Hi everybody, Neil here today. It is July 8th, 2020. Almost forgot what month it was. And we are here for our cherry bomb trade for the day. So for those of you that are here for the first time, thanks so much for joining us. For those of you that are here because you subscribed, thank you so much. We are ready to get started. On screen, you can see here I have our break-evens for this trade, and I also have our probability of expiration cone here. You can see the expiration, because we're going to be in the monthlies for for August. We're going to be over here at these expirations right here, and we can see, yeah, there is a chance that we're going to expire out of our break-evens here. But know that we take up most of that space here in the land of profit, right? But of course, if this is all new to you, we are going to start from the beginning over here in the Analyze tab in ThinkOrSwim, where we do our simulated trading. We're going to go over to Add Simulated Trade. We're going to twirl open because your options chain might look like this. We're going to open up the August monthlies. These will say 44 days to expiration as of today, July 8th. Having a hard time with the months. And then on the right side, we'll see our puts, and we come down to the 158 or the 19 delta. Now, if some of this stuff isn't how your platform looks, that's okay. I'll put a card up here for a list of videos that'll get you started in the ThinkOrSwim platform that I did this year, so it's up to date. I am thinking about doing a new series on the new web-based platform. If you have any thoughts on that, I'd love to hear your comments and see your comments, read your comments below this video. But over here at the 158, I'm going to right click this anywhere on the bid or ask and choose Analyze, Sell, Trade, and come to Iron Condor. Now, I'm not going to click it because I already did. This is like a cooking show, right, where they already have the casserole in the oven. So down here are the strikes. I'm going to bring this up here. I do this just to make it a little bit, in case there's something on the bottom of your screen here, like the player controls, etc. So here we see we have our 2 puts and we have our 2 calls, right? Because an Iron Condor is just 2 vertical spreads. Our put, we're going to be short the 158 and long to protect ourselves or to define our risk at 156. So it's $2 wide. And we can do the same thing here on the call side. We're going to do the 172 call that's short and a 1 long 74. 174 long call. I'm having a hard time today. We're going to collect just slightly less than 1/3 the width, and that's okay. That's close to our tasty trade mechanics that we want to follow. We want to understand our probabilities. So let's head over to this risk profile. We can see our standard, typical Iron Condor flapping its wings here. And we're pretty well centered here. I mean, maybe we're slightly bullish. We can see here that we benefit just a smidge, maybe, right? If we moved slightly higher. And that might be what happens, right? If it has a weak negative correlation to the S&Ps. Here we see the S&P is down a smidge, so we should expect this one to potentially, or sometimes, right, move opposite of that. So we have our break even set here. How did I do that? I went over to this little icon here, choose set slices to break even, and I chose expiration. And then I chose set slices to chart so that you could get these red lines here, right? Okay. So we're looking at a almost 59% probability that we are going to do to break even or better right here. So basically to profit. All right. Now, what's our max profit and our max loss? Right click your trade over here, choose confirm and send. And we're looking at a $61 max profit, and following the tasty trade mechanics is which we're, unless of course you're following your own mechanics, and that's fine. That's what we want you to encourage. We want to encourage you to do that. Here we would manage this at about $30 of profit. Take that off, right? Because Tasty Trade research shows that managing at 50% will give you better performance in the long run, better P&L. So the maximum loss, of course, is the width, $200 minus 61, $139 of possible risk. Okay. We're going to hit send. That's going to put that over into our working orders, and we'll see if that fills today. And if so, we will pull up our Trello trade journal, which we did a video on Friday. Here comes another card. Look for that up in your window if you're using mobile or on the web, right? You'll see that. Click that and you can watch how we use Trello to keep track of our open, profiting, and losing trades or lost trades. Okay. All right, everybody. If you like this sort of thing, would you consider hitting that like button for me maybe? And if you want to do this with us regularly, hit that subscribe button and ring that bell. You'll be notified that our videos have come out, typically come out at the opening bell. So thank you so much for joining us. I hope I've earned that like. And you know what? I look forward to seeing you in tomorrow's Cherry Bomb.